Major changes coming soon to the real estate market. Realtor commissions, they are likely to drop to a fraction of what
a new settlement could dramatically change the way you buy a home.
The price of buying a home in the U.S. is going up. According to new data out this morning, prices rose 6.5% over last year.
Biden's cure for high housing costs? A temporary $400 per month tax credit for first-time homebuyers.
With mortgage rates surging to 7.49% recently and home prices close to their all-time high.
The latest mortgage survey from Freddie Mac showing the average rate for a 30-year loan climbing to 7.49%.
Buying a house has never been a more scary prospect. Indeed, the housing affordability crisis has taken a turn for the worse, going from terrible to unbearable. And now, only a handful of individuals are able to deal with the highly imbalanced real estate market. The question is, what is wrong with the housing market, and why has owning a house become unimaginable? Well, according to recent data, housing affordability is at its worst level in about 40 years. And while some historians may argue that today's mortgage rates are not so terrible when compared to the 15% plus rates found in the 1980s, this doesn't quite tell the full story. Home prices have far outpaced wages over the past several decades, to the point where buying a home is largely out of question for a growing percentage of prime working-age individuals. Since 1965, home prices have gone up by nearly 120%, while median household income has increased by only 15%. This is, no doubt, a staggering economic mismatch that has granted only the wealthiest Americans the financial freedom to pursue real estate. In fact, the U.S. home price to median household income ratio stands at 7.75 as of May 2023. In layman's terms, this means it takes nearly 8 years of household income to purchase a home for the average family. Seeing that the median household income is $70,784, according to the most recent U.S. Census Bureau survey. This has become the highest home price to income ratio ever recorded. For context, in January 1985, the ratio was only 4.5. Clearly, hopeful homebuyers have noticed. Potential buyers are abandoning the housing hunt en masse in the face of perpetually elevated home prices and rapidly rising lending rates. And in 2023, demand for mortgages fell to the lowest level since 1996. Why has real estate become a no-go area in this decade? Well, there are 3 major factors responsible. The first is home prices. Prices remain the single most important factors when it comes to buying a house. While there are some regions that have experienced some cooling in the post-pandemic real estate era, by and large, prices have never been higher. Literally. As of July 2023, the median sales price across all home types was $421,714 per Redfin. Not only is this up 1.6% from the previous year, even in spite of the historically weak housing demand, but also it's a stone's throw away from the highest level ever recorded, $432,397 in May 2022. The second major reason why buying a home has become impossible is the mortgage rates. Mortgage rates are another relevant factor for the majority of Americans considering buying a home. And like I've hinted, they're terrible. In fact, it's been fluctuating between 7% and 7.4%, the highest level in decades. What is even more devastating is that rates may keep rising. With the Fed likely to hike rates at least one more time this year, don't be surprised to see mortgages come along for the ride. The third, home supply. Home supply is a tricky factor when it comes to home buying. Not only does the inventory of homes for sale affect other pertinent metrics like home prices, they are also one of the byproducts of an unfriendly seller's market. The fact is, many Americans are soaking up cheap equity under pandemic-era mortgage rates. As such, unless forced by unforeseen economic circumstances, many homeowners are likely to put their home for sale, understanding they would likely have to lock in a higher than preferred rate in a new spot. This has only amplified the already present home shortage in the country. As such, even finding an appropriately specified home in a desirable location can be an exercise in futility. And if you can't find the home you want, where you want it, why buy at all? This has caused tens of thousands of real estate agents to give up on the profession. By the numbers, more than 60,000 have exited the sector in 2023 alone, according to data from the National Association of Realtors, analyzed by Reventure Consulting. What happened was, to cool down the rate of price growth, the Federal Reserve jacked up interest rates. This led to a huge run-up in mortgage rates and a crash in home sales. And so, would-be buyers decided to rent instead of buy. They decided to stay put instead of moving, because why give up a 3% mortgage rate for a 7% mortgage rate? Very few units hit the market, so prices stayed high. This is the uncomfortable equilibrium that market finds itself in today. Nobody's selling because nobody's buying. Nobody's buying because nobody's selling. Nobody can afford to sell. Nobody can afford to buy. Prices are high, mortgage costs are high, rents are also high, and there's not a huge amount of rental inventory. Everyone's stuck and paying more than they want to. It is expected that things should normalize when the Federal Reserve eases up on borrowing costs, right? Wrong. The truth is, once mortgage rates drop, it will reactivate the housing market, leading to more demand. But with a limited supply, that would only lead to higher prices. In other words, millions of would-be homebuyers will flood into the market, bidding one another up and pushing poorer purchasers out. More homeowners will feel motivated to sell, giving up their 3% mortgage rates for offers above their imagined asking prices. But nobody expects the return of a buyer's market or anything like it. So basically, the underlying problem remains the underlying problem. The housing shortage persists, and high borrowing costs have intensified it because so many developers and home builders take out loans to complete their projects. So, until housing production ramps up for an extended period of time, and until there's considerably more supply relative to demand, things will not get better. In the past 3 years, many states have passed laws to promote housing development. They have begun easing zoning restrictions, allowing high-rises near transit hubs, and preventing owners from stopping development to protect their own home's value. Some states can decide to solve the housing supply issue by building new homes, but building those new units will take time in which demand for new homes will keep growing too. So what is a family looking to buy a place to do? Simply buy in cash. But it's not so simple though, if you don't have enough resources to do that. Buy and refinance when you can, if you happen to have the risk tolerance and financial room to do that. Buy with as large a down payment as you can muster to cut your mortgage costs. Or just rent for the next decade. But only a handful of people can do that. What is the housing market forecast for the coming years? Let's see. Essentially, all of the 2023 headwinds remain. Elevated mortgage rates, out-of-reach home prices, and record low housing stock continue to make for a perfect unaffordability recipe. Experts have said that recent boomerang in rates have dampened tentative home buying momentum. And while U.S. home prices declined in December 2023 for the second consecutive month, home prices year over year jumped 5%. Also, it is anticipated that there will be a slower rise in home prices in 2024 compared to recent years. Moreover, the fluctuation will vary regionally and depend strongly on local market supply. If the 2020-2021 housing market was too hot, then the 2023 market was probably too cold. But 2024 won't yet be just right. For a housing recovery to occur, several conditions must unfold. For the best possible outcome, we'd first need to see inventories of homes for sale turn considerably higher. This additional inventory, in turn, would ease the upward pressure on home prices, leveling them off or maybe helping them to settle back from peak or near peak levels. And, of course, mortgage rates would need to cool off, which experts say is imminent, despite rates edging back up towards 7%. For example, for the week ending March 21st, the 30-year fixed mortgage rate stood at 6.87%. However, when mortgage rates finally go on the descent, they may not cool too quickly. Rapidly falling rates could create a surge of demand that wipes away any inventory gains, causing home prices to rebound. It is better that rate reductions happen at a metered pace, incrementally improving buyer opportunities over a stretch of time, rather than all at once. Experts are hopeful about an improvement in the housing market in the coming years, as interest rates have begun to settle around 6% or even lower. A recovery might not happen just yet, but an improvement is possible. With many homeowners locked in at low interest rates or unwilling to sell due to high home prices, demand continues to outpace housing supply and likely will for a while. It is not feasible to have a meaningful increase in the supply of existing homes for sale until mortgage rates are back down in the low 5% range, so probably not in the next few years. Housing stock remains near historic lows, especially entry-level supply, which has propped up demand and sustained ultra-high home prices. Interestingly, new homes have continued to lure buyers frustrated with the lack of resale inventory. Sales of newly constructed single-family houses were up 1.5% in January 2024 from the month before and 1.8% annually, according to the latest U.S. Census Bureau and HUD data. And the median price for a new home in December was $420,700, widening the gap between existing home prices to $41,600 amid steady demand. Though down from its 2023 high of 7.79%, the average 30-year fixed mortgage rate in 2024 remains well over 6% amid rising home values. As a result, home buyers continue to face affordability challenges. Monthly mortgage payments are back on the rise, with the median payment in January climbing to $2,671, up from $2,361 in December. And the news doesn't appear to look much better for eager home buyers in the months ahead. In fact, a panel of 100 housing experts predicts that mortgage rates will stabilize at a median rate of 6% by the end of 2024. But even though this seems like good news, the panelists anticipate lower rates will benefit homeowners over home buyers, with lower rates combined with limited inventory pushing up home prices. If you're looking to buy a home, the prospects might be slim if you're going to consider a mortgage. It appears only those who earn enough to pay cash have a chance. But with the recent improvements in the sector, things just might change faster than expected. What do you think about this? Do let us know in the comments. Also, please like and subscribe to this channel if you haven't. Where money matters, we'll see you on the next one.